Hey everyone, welcome back to MaryFox Crypto, the channel where you're subscribed for the latest Bitcoin news, price action, and all things crypto. If you're new here, welcome, please subscribe, leave a comment down below, like this video, share it with your friends. And in this video, we're going to be talking about moving averages. This is a new part of my trading and technical analysis series, so if you have not watched my previous videos about candlesticks, make sure you do this after you finish watching this video. And if you are an experienced trader, don't forget to claim your $200 bonus on BYBIT. And I want to remind you to be very careful with leverage, never trade with 100x leverage. And of course, this link is only for experienced traders. With that being said, let's go straight to the charts. So what is a moving average? A moving average is a technical indicator in finance which many traders use to identify the trends or support and resistance areas. So of course you can do that, but the first thing that you need to know is that there are many types, not many, but there are a few types of different moving averages. For example, exponential moving average, which is a weighted moving average, which is used to put more importance on the previous price action, on the recent action. In this video, we are going to be talking only about simple moving averages and the strategies that you can use to improve your trading strategy, to improve your entry points or exits where you want to long an asset or short it. So make sure you watch this video because I will show you some tricks how you can test your strategy and understand what you need to do and change in order for it to perform better. So let's get started and look at this chart right here. This is a weekly Bitcoin chart, and the first thing that I wanted to say, in case you don't know, I'm sure all of you know, but in case you don't know how to calculate a moving average, basically you take, in this chart I have simple moving average of 3 period, 7 period, and 30 period, and this is a weekly Bitcoin chart. It doesn't really matter which period you choose. In order to calculate it, it's all the same. You just take the closing price or whatever you choose. Usually it's the closing price, and you add up. If you have, let's say, 3 period average, then you add the closing price of the first day, second day, and third day, if this is a daily chart, and then you divide it by 3, and this will be your first point in this moving average line. So now, as we talked about the calculation, now let's talk more in details about how you can actually use moving averages in order to make your trading strategy better. Let's start with a daily chart. You want your short period moving average to always be somewhere. You want this line, which is a short period moving average. In this case, it's a 3 period on a daily time frame. You want this line to always touch your candles. Why you want to do that? Because in this case, if you want to use 3 moving averages, of course you can use 2, but 3 in my opinion is better. So you can use this line and you will know how exactly the price looks even if you hide the price. So how you do that is you add a second moving average, and your second period moving average will be your intermediate period average. So you take a short period average, which in our case it's a 3 period average. Then you take an intermediate period average, which is a 7 period average in this case, and then you take a long period average. In this case is 30 period, which is 30 days. For a long period average, you probably want to use something more than 30, but it all depends on the strategy you're using, and you can test this strategy, and I will show you how you can actually do that. So if you can see right here on this chart, if you hide the price, you will see that you still know exactly what is going on this chart, and you can exactly tell how the price is moving, even though you can only see the moving averages. So let's put the price back. So how you can actually trade if you want to base your strategy on the moving averages. So some people use moving averages as a support and resistance line, and the key is to find the perfect period for a specific time frame. If you look at this Bitcoin chart right here, you will see that this 30 period average is pretty much supporting the price right here. It's not perfect for this particular price action. You would probably make it something like 50, but it doesn't really matter in this case. So the point is, you wait for the price. If you are in an uptrend, and how you can tell if you're in an uptrend, you basically put something like 200 period average, and if this long-term period average is going up, it's not flat, it's not going down. So if it's going up, then you are in an uptrend. The perfect environment for an uptrend is when your short period moving average is above your intermediate period average, and of course it is about your long period average, and the price is above short-term period average. So this is a definition of a bull market. And in order from a bull market to go to a bear market, your short-term period average should cross the intermediate term and then cross the long-term period average, and in the end the long-term period average will go down, and this is when you are in a bear market. Of course, there are some intermediate conditions between the bull market or bear market, because you can go from a bull market to a bear market in 1 second, and in this period you will have your price go below your short-term period average, but your intermediate term moving average will still be above your long term, and there are many variations until you reach the point when the price is below your long-term period average, and this can only happen if the price will actually close below your long-term period moving average. So if you look at this example right here, you can see that the price touches it one touch point here, here, and here. It would be better if this line was somewhere here and it would touch the bottom of this candles, but it doesn't matter, because the point is, you want to, if you are in an uptrend, and as you can see we are in an uptrend, you want to wait until the price goes to this line and then it bounces off and goes up. And in this case, especially if it happens many times, for example, you can see right here one touch point and then another one is here, and this is when you can enter your long trade. How you can understand when you want to exit the trade: you can use something which is called crossovers or cross unders. This is basically when your short-term period average crosses below your intermediate term period average. This is when you might want to exit your trade, but of course you need to decide first whether you want to speculate on the price or if you are an investor. And if you are an investor, it would absolutely make no sense to jump in and out of trades dependent on a short-term and intermediate term crossovers, as long as your long-term period average goes in an upward direction. So now we will delete all the moving averages and just look at this Bitcoin weekly chart. So we will test how our strategy, it's not actually a strategy, but a way some people use to recognize when the trend is going to another direction and when you should enter or exit your trades. So this is a crossover kind of strategy, and the reason I'm showing you this is because you can test any of your strategies, no matter what kind of strategy it is. Even if it's not a moving average strategy, you can still use this Pine editor in order to understand if your strategy is working well or if it doesn't work at all. Right here you can see this is just a script for our strategy, how you can enter a long trade or a short trade on this weekly Bitcoin chart. And of course, the key point is to find your perfect period moving averages before you do anything else. You don't have to use this part right here and probably this part as well, because this is only like, you can, if you add this part here, you can input like numbers from here, from this window, and you don't have to go to the code and do it right there. But of course, it's not necessary if you do all of this by yourself. So in this case, our strategy is using 2 period for short simple moving average, 7 period for an intermediate term, and for a long term it's 30 period. Of course, you can do this yourself and choose the best moving averages that work well with your trading strategy. So basically, as you can see right here, we enter a trade when we have a crossover. Basically, every time the short period moving average goes above the intermediate term moving average. And we exit a long trade when we have a cross under between the closing price and a long-term period average. So as you can see right here, we are still in a long trade. We did not close it yet because the price is so far away from a long period moving average. And speaking about short trades, we enter short trades every time we see this cross under the short-term period average goes below the intermediate term period average. And we exit short trades every time we see a crossover between the closing price and a long-term period average, as you can see right here. This is actually the most important point. Because if you are an investor, you want to make sure that you are in this asset, no matter what it is, either if it's a Bitcoin or if it's something else, that you are in a long trade or you have invested and you keep your contracts or like money, whatever, in this asset until you see that the long period average starts to go in a downward direction. So as long as it's going in an upward direction, you don't want to take your money out of it. And this is important because in this case, you can make sure that you will be in a profit and you will not end up losing your money in case you want to try and speculate on this short period fluctuations on the price. And this is basically our strategy, and now we will see how it is performing. So you have this feature here, which is a strategy tester, and you can see that we have 67 closed trades. You have a percentage here, how many trades are profitable, and you can see right here that we've made $12,000, but of course it's not true. We've made much more using this strategy because we have opened this long trade at $10,000 right here, and right now Bitcoin is at $63,000. So you've made a huge profit, especially if you use leverage. Of course, you want to be careful with leverage and you don't want to use 100x. Never do that unless you want to lose all of your money. So if that's not what you want to do, then be careful. And here you can see performance, net profit, and other things. You can check it yourself, and of course you can see the list of trades. So if you don't want to go back and do this yourself and write it like in Excel or other stuff, you can basically do this with Pine Editor, and this is a really cool feature, and you can do this with any of your strategies. Another way to use a moving average is as a resistance. So basically it's the same thing as you do with support. So let's go back in time and check how the price was performing in a downtrend. As you can see right here on this chart, the long-term period average was still kind of bullish because the best strategy to use on Bitcoin was buy 10 years ago and just hold it. But as you can see, the intermediate term moving average, it's kind of flat right here, and then it goes down, and you see here we have this cross. So in order to identify a moving average as a resistance, you need some touch points from below. So as you can see right here, we touched this line and then we went down again. So how do you want to enter your trade? As you can see right here, according to our long period average, which is a 200 period average, and you probably don't want to use that on a daily chart. Of course, we are still in an uptrend, probably want to use something like 100. So as you can see right here, this intermediate, or in this case, if we delete the 200 period average, this becomes our long-term period average. It went flat and then it went down. So at this point, you should look for an entry point for your short trade. And how you can do that is, it depends on your strategy. But what is important is that you can do this by looking at the candlesticks. So in this case, this candlestick is clearly telling us that the price will probably drop, and it did drop. And of course, you could have entered your short position right here when this crossover happened, but you could wait until you see this downward movement. And that was all for today's video. Make sure to check out the link in the description down below and claim your $200 bonus on BYBIT if you are an experienced trader. Tell me in the comments what topic you want me to cover next. Tell me if this video was useful for you. Like this video, press the notification bell, subscribe to my channel, and make sure to check out my trading and technical analysis educational playlist in case you have not done that already. And thank you so much for watching, and I will see you in the next one. Bye.